Good afternoon, everyone, and welcome to my research video. Today is Wednesday, October 29th, 11:48 a.m. Eastern Standard Time. My name is JR, and just had no technicals today. Just wanted to show two fairly important articles that I think we should be aware of. Today we will be also also make another video here later today, covering, well, not covering, but at least going over the FOMC statement later today, right? That's going to be at 2 o'clock, so I'll probably do the video later on today, and hopefully we'll have it out by the end of the day, first thing in the morning, okay? And so that meeting's at 2, but the first thing I'd like to go over is this article here by the Bullion Desk. As always, you will find all articles at the link below. And this is your first article titled "Gold Prices Steady, GOFO Slips into Backwardation." Okay, backwardation is pretty important here because if some of you don't know what backwardation is, it's basically an abnormal market. I've made this little chart here to show how a normal market works in the futures market. Now, backwardation is in the futures market. Okay. This is your chart, this is time, this is price. A normal market, you have as time goes on, as the higher the prices go, right? So and this goes not just for gold and silver, but it goes for any commodity market, right? So orange juice, wheat, corn, doesn't matter what it is, oil, any of these markets can go into backwardation, okay? And this is a regular market. This is a normal market, okay? This market is called contango, okay? If you are a customer and you're looking to purchase oil or gold or whatever your commodity is, if you set up a contract with your supplier to deliver, if today is December and you're looking to get delivery in January, then obviously the producer or the seller has to incur some cost. They're called carrying cost, to store the metal or to store whatever commodity it is and to maintain the commodity until January for you to receive delivery. If you want them to hold it for a little bit longer because you want delivery in February, then guess what? The prices go higher. And this is a normal market. As the longer you wait, the higher the prices are going to be, simply because the cost of carrying these commodities and holding and storing, right? So this is a normal market. Most markets are, all markets are usually work this way. In a backwardation market, it's backwards. It's like this. It basically suggests that there's a huge interest in taking delivery immediately than to take delivery in the future. This is a backwardations market. It's not a normal market, and usually when gold prices or when commodity prices go into backwardation, this is a signal, this is usually signals a rise in prices in the near term. And the reason why is because you have a lot of speculators and you have a lot of the futures traders. They realize that this market is abnormal, and what they're going to do is they're going to start buying future prices, buying, because they know eventually this will come down here and this will come back up here, going back to a contango market. This is the way you want it, right? So you're going to have a lot of buyers when the market is in a backwardation, and that's really all it means. There's a huge interest for these customers to take delivery now instead of waiting the next coming months or the next coming years, whatever the case is. So as of now, today is the second session. I'm sorry. Today's the third session where the prices are still in backwardation, and again, this usually does suggest a spike in the commodity, whichever commodity is in backwardation. In this case, this is the gold market, okay? The 1 month to 2 month and 3 month gold forward offered rates, GOFO, slipped into backwardation for the first time in nearly 3 months, indicating that many investors are looking to take delivery of the physical metal immediately. Typically, when the GOFO rates moves into negative territory, market observers believe that the price is set to rise sharply in the future. Okay, and that's your quick headline here for this backwardation. All right, so that's very positive. Okay, and I mean, also you look at the prices again. I'm not doing any charts, but you look at these prices of gold, and you have to think to yourself, these prices are really good, so you're probably going to have a lot of demand here. But again, this is just an indicator. It does not guarantee that these prices are going to skyrocket anytime soon. It is just a probability, right? The next article, again, you'll find the link. You find it at the link below. Sweden hits the zero bound. Okay, again, another central bank has added zero interest rates into their game, and again, the Swedish central bank, Riksbanken, has just lowered the interest rates to 0%, which was reported at the press conference in Stockholm today. This is a response to a couple of months of deflation, and with it enormous pressure from both politicians and Keynesian know-it-alls to quickly and massively lower interest rates. Of course, the interest rates was already very low, and at zero, it can't get any lower. In other words, we've reached the zero bound. Why? Depression phobia. According to the Riksbanken, they do not expect to raise the interest rates until mid-2016. Here we are, Europe, US, Japan, I mean, every country, I mean, it's really a cooperative system that it's going on right now, and really all central banks are lowering interest rates down to zero to stimulate the economy, but nothing is working. So again, money printing, we're going to announce today that they're going to stop, or I guess they're supposed to announce that, and I guess they'll also talk about interest rates. I guess there were some rumors that put a lot of pressure on gold, saying that the interest rates were going to be raised a bit sooner than mid-2015, but my guess is that they're probably going to keep it low till later in the 2016, possibly even later than that. You're done printing money. You can't print any more money. Actually, you can, and most likely they will start. But interest in the U.S. are already at zero. The decision means, according to the media reports, that central banks now pays a negative 0.75 on banks' funds held at the Riksbanken. The immediate effect in the financial and money markets was an expected fall of the krona, the Swedish currency exchange rate. To the central banksters, journalists, and pundits, this is great news, since this means a booming export sector, more expensive exports, and therefore prices inflation to relieve the country from the horrors of a possible deflation spiral. I guess we'll see. Sweden has a history of manipulating its currency, a standard solution in the 1970s and 1980s that led to the country suffering a depression in 1992. During the past 2 decades, there has been political consensus around cutting down expenditure through rolling back the welfare state, paying back public debt, and lowering taxes, partly to regain the lost confidence. Today's decision by the Riksbanken is not an outright devaluation of the kronas, the preferred measure of old Sweden, but a similar effect. Update. In addition, and by the way, this was yesterday. An official statement, the Riksbanken note that the Swedish economy is relatively strong. So why are they lowering interest rates down to zero? And that the economic outlook is improving, but inflation is still too low. The central bank's target is 2% price inflation. The only major potential problems is that the public debt level, which is too high. Especially mortgages in the real estate market, it is generally considered to be a bubble. Prices in Sweden home prices have been skyrocketing. The debt level will not, of course, get lower with lower interest rates. For this reason, many experts expect a legal amortization requirement on mortgages in the near future to lower the public's debt, as well as cool off the real estate market. Update 2. In the Q&A following the press conference, Riksbanken Chairman Stefan, I will not even try to pronounce that, makes it very clear that there is no technical limitations to lowering the interest rates way below zero. But this is not necessarily at the present, and it is a measure included in the central bank's prognosis. It is possible and may be preferred course of action should the economy's situation deteriorate, states exifs. All right, so there you have it. More central banks lowering interest rates to stimulate a dying, a suffering economy. Gold goes into backwardation, and again, you have some crazy patterns here in these charts. So it'll be interesting to see how the next coming 6, 7, 8 months will play out. So again, as I stated last time, you know what? Now that I have it up, I might as well just say this real quick. So, as in my last video, I stated that gold would be looking to find some support here, roughly around the 1223 zone here, okay, and currently testing this level here. So we tested this level here yesterday, and we saw a big spike to the upside, 1235, and we had some negative data come out for the US dollar, and since then, again, more sideways trading here, okay. So again, nothing special here on this market, all right. And as of now, I'd like to see this. I'd like to see what's going to happen. I think the market has already priced in the end of quantitative easing. I think the only thing that can happen now is they surprise us and say that they're going to keep interest rates low to the end of 2015 or possibly later on in 2016. And also, I think the market has already priced out that today will be the final day for the quantitative easing. All right. I would predict that they do end it in another 6 or 7, 8 months. They will start again, maybe in less than maybe after the elections. But this is what we're looking at right now. Testing the 20-day moving average. It goes up above the 20-day moving average. Right now, it's time to test this 20-day moving average, and we'll see if we're going to continue to make higher highs. But as of now, we are creating higher highs and really just flat, waiting for today's meeting. Right. This is the last, I think on my last video I said this is the last zone. Really, this is the last zone here. And the reason why I say this is because this is the zone that broke this downtrend and created a new uptrend. So at this point, we'd like to see if either this zone will hold or this zone will hold. I like this zone better simply because we have a confluence with the 20-day moving average of lows. This one, no confluence with anything. I like zones that have confluence. That way you can have two indicators telling you the same thing. If this Bollinger Band would be here at 1205 or somewhere in this zone, I'd like this zone also. But as of now, the only reason why I like this zone is simply because it broke this trend here, okay? So we could see a move like this. I wouldn't bet on this zone here, but we can see a move like this. But again, really a close below 1200 or even below this Bollinger Band at 1299 will be very bearish for gold. And you know, at that point you want to see where this market is going to find some support, okay? But you definitely don't want to break this level here. Break at this level here will probably bring this metal down to 1050. I've already said that. All right, guys, that's about it. Hope you enjoyed the video, and we'll talk to you later today with the Fed market news. Bye-bye.